it also facilitates, or let's say provides greater risk to landslides. For instance, that the glaciers are effectively no longer holding the land, we're not able to rely on this. This could create significant risk for real estate or, let's say, infrastructure located in mountain villages. So tangibly putting natural capital into a real-life example helps us to understand really how material some of these changes, albeit maybe that take a longer time, such as what we anticipate for, let's say, glacier eradication. Hopefully we can stem this. These have real-world tangible impacts both on companies, but also as individuals ourselves. So I would like to invite our panelists today, please. I'm joined by Manjit Jus, who's the lead sustainability analyst at UBS, Fabio Oliveira, who's also a director and senior ESG officer at Zurich Invest, and Fiona Quinlan-Wells, who is a representative from the UN Sustainable Stock Exchange Initiative. And I too will sit. So Michael set the stage very well at the start, discussing a lot of the, let's say, regulations. Of course, we will touch on regulations when we think SFDR, CSRD, FINMA, all of the PAIs that we need to be reporting to, but also we hear about the TNFD, TCFD, and also the interlinkages there. And this has tangible examples, but I also want to hear from Fiona. If you can help set the stage a little bit about what the UN and the UN Sustainable Stock Exchange Initiative is doing currently.
Sure. Thanks so much. I think my mic is on. Great. Thanks so much, Kieran. Thank you very much to SIX and S&P for inviting the UNSC to join you all here today. So the UN Sustainable Stock Exchange Programme is a partnership initiative. We were formed in 2009 by Ban Ki-moon, and really with that aim to bring together stock exchanges, but also with market regulators, with stakeholders from the corporate and financial institutions as well, to advance sustainable issues that stock exchanges could bring organisations together on. So within that particularly, I focus a lot on our capacity building work, which we deliver through the SSE Academy. And really the target audience for a lot of our capacity building is the issuers. So what we find is that stock exchanges have often got fantastic convening power in their markets, as we see today. And so that for us is a great route to kind of proliferate sustainable messaging and bring about better financial practices through that audience.
And I saw recently, I think it was a publication with ISSB and TNFD recently announcing that there was some collaboration. I believe the UN also was collaboration with the TNFD.
Yeah, sure, definitely. So at the SSE, we've sort of been working quite closely with the TNFD since the sort of back end of last year. So we have a 2-year sort of partnership programme with them that we're kind of working on to really advance that implementation of the TNFD materials. And that sits alongside, as you say, the close working relationships that the TNFD is building with the other standard setters. So with the ISSB, they have announced quite a close partnership just recently with the TNFD actually to bring those two work streams together. So the ISSB have their biodiversity and ecosystems project, I think they're calling it at the moment, research project. So they do have quite a sequential approach to getting towards a standard, but they're working right now to develop that first biodiversity standard from the ISSB perspective. So I think as much as standards development is exciting, I think that is a really exciting development because that will then set that global baseline to really get, all organisations globally hopefully thinking about nature and biodiversity. So I think that will set potentially the floor, but then obviously, we see more ambitious initiatives potentially as well alongside that still playing a role, such as, having the European sustainability reporting standards, which obviously are very closely linked to the TNFD as well. So I think kind of that two-pronged approach of having the global standard, I think will be really important, but still working, I think, to advance practice and really understand these issues strategically and implement them will be important as well.
I think that's a particularly material point to highlight. There's significant traction being gained when institutions or quasi-governmental institutions such as the UN and UNSSC are collaborating with the TNFD, and then you see the TNFD in collaboration with the ISSB, similar to what Michael Taschner was mentioning before with the integration of TCFD within ISSB. We're starting to see a quicker, maybe, adoption of some of these practices, and I look forward to some of the speakers later from Givaudan and Holcim as well to kind of share that first mover advantage, that experience that they've had. I also really like to highlight also on Michael Taschner's first slide, or one of the first slides, when they highlight that World Economic Forum report, and you see the top 4 risks, those are all natural capital. They're all the green-related environmental risks. We're looking at natural capital risk, ecosystem service access, flood risk. I think that's particularly interesting to also highlight that there is such an interconnection between these. And I am going to champion some of the questions that Michael was mentioning with our financial institutions experts over here. So I wanted to quickly ask this question, both to you, Manjit, and to you, Fabio. So in addition to the regulatory reporting that we're seeing from FINMA, CSRD, whatever that may be, why should one consider nature as a material consideration, and kind of what is the experience both at Zurich Invest and at Zurich Invest and at UBS? Maybe Manjit, if you'd want to start.
Yeah, sure. I'm happy to do it. I mean, clearly it's emerging as a theme that not only regulators are talking about, but our clients. And so that's clearly something we also need to pay attention to. And if you see, some of the work that's been done over the last few years, also with launching new products in kind of the nature space, that I think clearly speaks to the times and the interest. I think for us, it's very important to be prepared for regulation that is coming, for reporting requirements that are coming, and as you know, that takes time and preparation. So. These are things that we very much, start to work on now, whether it's looking at what types of information are available to us today to start measuring things around nature or biodiversity that we weren't doing before, and thinking about how we might integrate that into, our risk management processes. But then you kind of have this more embedded into what we're doing day to day, and that work has to start well in advance of the regulations actually being there.
Thank you, Manjit. Fabio?
So just to add some points. So we also started with this analysis or an assessment, to better understand how nature and biodiversity is embedded within the investment process of the external asset managers. How is it embedded within stewardship, especially within the engagement, where we analyzed, for example, how supply chain engagement is conducted from the company. So are they transparent regarding their suppliers and their sustainability practices, but also the data and metrics dimension, who is quite challenging at the moment. I think at the moment there are over 3,000 metrics to measure and to compare nature and biodiversity. And therefore we wanted, let's say, to get a first feeling within the portfolios, within the traditional side, equities and fixed income. We started with assessing the exposure of the companies to key biodiversity areas and protected areas to understand where potential risks are within the portfolios, but also if they have biodiversity commitments. This is also everything something that's very important for us. And within the private market space, for example, private equity and infrastructure, we analyzed how it is embedded within the due diligence process of the asset managers.
So there's a lot there on those 2 points that we've made between you and Manjit and Fabio. Manjit, you came from the new product development, kind of capital access, I think reports indicating roughly 25, give or take, biodiversity funds out there today. I recently saw Goldman Sachs launched a bond fund upwards of 500 million euros in Europe, SFDR Article 9 fund. So capital access is obviously a material consideration for a lot of the non-financial, well, let's say just corporates generally, or non-financial corporates looking to raise capital. So from the opportunity perspective, there's obviously a lot. But then obviously when we're talking today, I think we're coming also from a risk management side of things today. And then obviously you've mentioned stewardship, Fabio, so thank you for that. I think capturing comments such as like bio commitments and looking at the kind of how you've assessed impacts and dependencies, which is also a TNFD type of framework and terminology, in the due diligence process for private markets, I think also speaks volumes to the requirement, but kind of the approach that financial institutions are taking when they're looking at mandates or also looking at engaging with corporates themselves. And then we have to also see, how can we do this? You mentioned that there's over 3,000 metrics. I know, Manjit, you've done quite a bit of work on looking at biodiversity solutions. Can you tell me a little bit more about some of the tools, the tangible tools, what you kind of need from, let's say, issuers themselves or in private markets to facilitate the work that you are doing from a risk management perspective, for instance? And maybe we can start, Manjit, with you, and then Fabio afterwards.
Sure. So far we've used Encore, which was on the slide before. So that is a very kind of sector-based approach to looking at biodiversity impacts and understanding dependencies and kind of the material links between things in the natural world and companies, but at the sector level. Clearly was also on the slide, but biodiversity challenges and nature challenges are very geo-specific, so they are very tied to individual locations. And that can be, distances of just a few kilometers that make all the difference. So clearly, the need to have more company-specific data is kind of the next step in that evolution. At the same time, we understand that having, asset-level information it's still tricky. It can be patchy depending on the sector you're looking at. I think even if you look at the methodologies that are put out by data providers, they kind of combine both. So where there is good asset data, we'll use information from companies, and where there isn't, we'll use some kind of a sector regional proxy. So certainly when we think about that and we think about how we do this internally without access to all that information, looking at if whether you can pull more kind of geo-specific information to overlay on top of something like Encore. But I think something like Encore, it's great that it exists because I think it has evolved to become somewhat of an industry standard. I think there's a lot of credibility behind it. It's being updated, it's being used quite broadly. And so that gives us kind of a baseline sense of, confidence, and it also gives us kind of a source of kind of ground truth, if you will, to be able to check data sets and kind of, evolutions of biodiversity assessments more at the issuer level to something that is more, at the sector level. But clearly, more granularity will be needed, but I think there's still a couple of steps in terms of getting really comfortable and confident with that level of granularity to do it. And I guess it's different from a corporate perspective. Very much looking forward to hearing the conversation afterwards when you're going out and trying to measure, your own exposure supply chain versus doing that at the financial institution level where you're trying to aggregate the companies and the thousands of companies and their supply chains up to some meaningful level. And so, I think it's a trade-off of having something that's very specific, but at the same time having something that's somewhat easy to digest and is explainable and can be applied at a large scale.
I think that's a great point also, right? When you think about applicability and comparability in an aggregated form, comparing multiple sectors. We obviously talked about the TNFD being sector agnostic. We need critical, let's say, metrics that are aggregating so that we have a comparable footprinting metric, CO2 equivalent, for instance, a type metric like that. I know at S&P Global we use the Ecosystem Integrity Index, thinking about like a composition, function, and structure of an ecosystem to aggregate many of these kind of underlying components of, let's say, ecosystem health or intactness that can be a proxy for whether or not the ecosystem will continue to provide the natural capital required to effectively run the operation. And I recognize that that's going to be an incredibly challenging thing for financial institutions, but also the corporates speaking afterwards to assess at what point is there a tipping point on ecosystem services like pollination? At what point are we looking at the intactness of an ecosystem and indicating, okay, we're seeing that the ecosystem in this particular area offering pollination services is only 60% intact. Is the tipping point 59% or is it 20%? When is it no longer going to be able to provide the ecosystem service that I rely on as a corporate to provide supply chain activities, which obviously is very material to the financial institutions considering providing lending and behavior like that? Fabio, I was wondering, can you also share a little bit about your experience with this?
Yes, sure. So Encore was also our starting point. And what we did is we also analyzed or assessed the weightings within the portfolios, and then we had a look into the companies that have, let's say, a high ecological impact and are highly dependent also on biodiversity and nature, and then we analyze their biodiversity commitment, if they have one or not, and then try to compare different companies within a sector just to get a little bit of feeling about the risk that investors could face within this area.
So effectively, you have almost like an internal, say, rating system, for instance, as you will, to be able to compare these two compare companies within the portfolio potentially, which is high risk and less, maybe.
No. What we did, we used external data providers, and we do the same within the climate dimension, that we regularly compare the data output from different data providers, and we did the same within this dimension, and we focused on the ecosystem impact and the dependency, and then we compared some of the, let's say, highly weighted companies within the portfolios. So at the end, this was our starting point, and we did the same within the climate, and I think it is very important, not only for financial institutions, but also for the corporates, to starting measure, because we did the same with climate. So we started measuring data, 10, 15 years ago, and we got a feeling the data coverage increased and so on. And I think this is also important for nature and biodiversity to have this starting point.
So I want to say a bit of a call to action might be start to disclosing just material-related risks to the company's businesses for which you maybe have holdings in or consider as clients of yourselves. I would say location specificity, Manjit, you also mentioned a bit about this. Of course, that is going to be instrumental when you think of measuring a company's assessment, because you may have a company with 400 assets versus a company with 100 assets, and it may be affecting deforestation. But if one of them is going to be located in a key biodiversity area, or like say naturally critical assets, maybe say the Amazon rainforest, that's going to have a significantly different impact than it would if a company is operating maybe more assets, but all of them are in not very biodiverse locations, maybe in a desert, for instance, which is inherently less biodiverse than, or say, critical asset compared to the Amazon rainforest. I think these all provide, say, hurdles to companies starting to adopt this kind of in risk management practices, but also recognize that these are also very material things to consider when you are doing a first step assessment, such as what you're doing with Encore. That clearly represents, Encore seems to be the quasi-standard, as you mentioned, Manjit, to first step analysis when doing a biodiversity assessment. So encouraging companies, I think, to go that route with the LEAP approach with locating assets and then evaluating them. I want to, Fiona, please.
Okay. Yeah, I was just going to say, I think probably building off what we were talking about earlier on the climate front as well, it is where there is at least that advantage here that we've been through that process with TCFD. So, those doors between ESG sustainability teams and risk teams are at least open. I think there's an understanding of the need to broaden out risk processes to understand these factors. So I think in some senses that's a good starting point. And I think with the guidance that we're building for companies at the moment and the training we're working on with TNFD, we're trying to come from that starting point where, particularly when we're talking globally, a lot of firms will be very new to this and will be quite probably intimidated by those figures of 3,000 metrics, etc. But actually starting with that point regarding, the interconnection of climate and nature, you have a set of climate risks that you can work with here. Let's start with thinking about what the nature-related impacts, dependencies are that come out of those. I think hopefully means there's, at least a little bit of a bridge in that direction, so it's not a complete clean slate as we were up with climate a few years ago. Yeah, true. We have building blocks to, or let's say learning experiences that we can elaborate upon from the TCFD's experience, as Michael also noted. Fiona, I'm going to stick with you actually. So exchanges, regulators, how are we considering nature? So obviously we're talking about the Swiss market a lot, but also how is this being considered globally? A lot of, like Manjit, Fabio, you both mentioned supply chains. Those are not inherently solely within Switzerland. Obviously there's going to be significant impact globally, and then regulation provides a significant tool to encourage assessments or encourage reporting, which ideally enables a supply chain analysis. I would like to hear from your experience, Fiona, working with so many stock exchanges globally. Where are you starting to see adoption of, let's say, nature or climate reporting? And I would guess that these are going to be in more, like say, natural critical hotspots. Yeah, it certainly can be. I think it kind of speaks to what we were talking about earlier as well, about how closely sort of market practice, regulators and stock exchanges need to work together, because I think, there's been kind of quite a strong mandate to do more on nature for a number of years now. We had the sort of coming Montreal Biodiversity Protocol coming out, and that set quite ambitious targets for 2030 to get, I think, all businesses assessing nature-related risks and opportunities. So that sort of global UN scale target was set. And then the G20, I think, have also been looking at that, but there has been a little bit of delay, shall we say, in seeing that fall through. And I think that is partly because regulators, of course, also need to understand this topic better themselves and understand, how market practice is evolving. So, keeping an eye on those firms that are progressing this and what's working, what isn't. So I think it's that close sequencing that you're seeing at the moment, where the regulators are monitoring that emerging practice quite closely to understand, what is it that we should be looking for as consistency here? What are the tools and methods we should be, recommending? But certainly within our audience, we have, huge amounts of interest in this topic, both from issuers and from exchanges. I think, as you say, a lot of the kind of emerging economy and kind of middle income markets have, huge exposure potentially to biodiversity risk, and also a lot of, it's a very big generalization obviously, but I know some of the big markets like, Indonesia, Brazil, etc., that we work with obviously have huge natural capital assets within their countries that are inherently important to them, and that companies obviously often sit in the value chain as well of, European businesses who are being pushed to look at these topics. So I think we're seeing lots happening already before that regulation is there. And I suppose what we're trying to do is to work with the regulators and the standard setters, but also, not slow down that market practice and help to provide some practical support in the meantime as well.
Absolutely. And I think the UN's engagement provides quite a lot of credibility to encouragement of adoption of these practices as well. I want to quickly address a point, Manjit. You actually mentioned this right at the beginning, and I know, Fabio, this is very likely material to you as well. What are your clients saying to you? Are you seeing this as becoming a bit more of a common, let's say, theme being brought to you either by mandates or through other funds particularly? Are you seeing that biodiversity or climate generally is starting to become a bit more of a prevalent area of focus? I know you mentioned stewardship, but it may be a bit earlier than that.
I think from our side, as a starting point, it depends also a little bit on the client. We have clients that, let's say, they already have set net zero targets and so on, and we have clients that are still starting with first initiatives. I think it is important for them to understand the data and where potential risks are or could be within the portfolios, but also, starting to report on progress that we or the external asset managers do. I think that will be important, but also within the engagement area, this will be very important, because we have seen it with Climate Action 100+, where when you have a connection of different investors or asset managers and asset owners, that yes, this can cause impact and also drive change.
Yeah, we are starting to see some more asset owners starting to create more mandates toward climate, sometimes biodiversity. Not in every region, but particularly also we're starting to see that a lot more in the Nordics as well. So getting access to capital is going to require some asset managers to be taking significant steps on actually engaging on biodiversity considerations and climate. And I know Manjit, UBS, I believe the Rockefeller Fund that you have, would that be relevant to such a...
I think, that's an example of, a partnership with Rockefeller Asset Management, where, clearly to serve a very specific kind of segment of client needs. Blue economy, that's if we're talking about nature and biodiversity today, I think most references are to things that happen on land, and that's where the data actually is. It's all about terrestrial impacts. If we get into kind of the real world economy and real world impacts in the ocean, that's where I think from a data perspective it becomes much harder to measure and to quantify. But even there, clearly there is interest in looking at companies that are providing solutions, companies that are managing plastic waste. So that is an example of a partnership that speaks to a very specific thematic, which is, kind of the blue economy overall. But again, I think still we see the market as being fairly, niche, and opportunities tend to be still kind of on the, growing, and I think it's largely due to the fact that there isn't really yet a good understanding of how do we measure this and how do we quantify this, and there isn't a lot of company reported data yet to back up I think the level of scrutiny that you would want to have when you build a specific product. So I think we're very much kind of on the journey together. I think if you look at what we do more on our social impact side, I think there's a lot more opportunities where you are realizing projects that are material in the sense that you're working to conserve mangroves or plant them, and it's small scale in the grand scheme of things, but that's where I think from a measurable impact point of view, you can kind of start, and you don't need the vast amounts of data sets on tens of thousands of companies to be able to derive some level of insight. So it's stepping stones. But
yeah, that reminds me of the cliche term that you often hear at an ESG conference: don't let good be the enemy of perfect, right? And I think that's very admirable that we are taking these initial steps, also recognizing that there are limitations. Academic research is also slowly progressing when it comes to measuring impact on water, freshwater, or oceans, for instance. And I think as soon as these also become more commonplace, and obviously we have solutions and solution providers also in the audience today where these are starting to become a bit more accessible, I think this will enable a lot greater, let's say, granular materiality assessments or impact assessments when we speak of impact and dependencies. If we envisioned that previous slide that Michael Taschner had up, that I think should start to become a bit more capable or doable. I wanted to open the floor, though, to audience questions and make this an engaging session. It's enough about me speaking right now. If anyone has some experience or any questions that they might want to ask towards our panelists today, whether that is the UNSSE, Zurich Invest, or UBS on, say, how we assess on impact, regulatory side, or impact on nature. You're welcome to think of questions as we go, because I can ask my own. Think of some if you have some, but I'm going to actually ask my own question then. I would like to hear a bit more about the elaboration on engagement and stewardship activities, and how rigorous is this approach, and how are you seeing companies respond to this engagement? Is it positively received? Is it becoming too much? Are the pension funds or asset owners being aggressively towards this, championing ideas? Maybe we can start with Fabio.
Yes, sure. So what we have seen is that supply chains are very complex, and so this does not change regarding or with focus on biodiversity and nature. But what we see is that there are a lot of asset managers that that consider nature and biodiversity within their engagement activities. With focus on the supply chains, and there it is more about supply chain risk that you have. But I think that this will be, let's say, in a few years, it will be, let's say, a standard engagement theme of every asset manager. And yeah, so maybe regarding also proxy voting, also I think there are at the moment no specific proxy voting principles where you can vote on, but this will also increase within this area. So yeah.
Thank you. Maybe going back to the question you had before around opportunities. So the fund you mentioned, that is actually an engagement fund, so it's specifically set up in a way to be able to engage with those companies that can make significant progress, but also have significant impact in terms of improving, their business practices, and then reducing their negative impacts on nature, in this case on marine ecosystems, or actually having a positive impact through the solutions that they provide. So I think having that engagement theme front and center is important, because it is a new topic. It is something that is harder to measure, and so engagement has to be part of that. Then I think on the kind of the broader set of metrics that you would need to measure biodiversity, I think because it's so new, I think there's a lot of capacity building to be done. And, coming from more the research and the data side myself, and having worked with companies, we're trying to, as financial institutions, wrap our heads around how we're supposed to use, satellite imagery data, asset data, all these new kind of data sets that haven't been used traditionally so much in the broader kind of sustainability space. But I think, it's important to make companies understand that. It's not just what you're reporting today, but by the way, we're also using asset data that is being scraped from your report or from your website, is being estimated on top of what's being reported. And actually, the decisions we're making about your biodiversity risk is not just what you're putting in your report, but it's actually, all these alternative data sets. And I think that, to me, whether it's, climate physical risks, whether it's biodiversity, I think that should serve as a good basis for a conversation between the users of this information and companies, because I think often they have no idea that, this is how decisions are increasingly being made. So I think that's an interesting observation as we think about companies reporting more. It's not just what they're reporting, but it's everything else.
I think that is a fantastic way to wrap up our panel, because on that note, if you think about S&P Global as a provider of sustainability intelligence amongst other topics, if you are not disclosing the information, companies like ourselves or our competitors will estimate it and then share that information further down the line. So a call to action to corporates would just start to make these kind of first assessments on materiality assessments, or start to disclose on asset level risks or impacts, because then you are championing or say in control of your own narrative towards financial institutions. Otherwise, companies like S&P Global and maybe some of our competitors will start to estimate that instead and still share that information more widely. So on that note, I would like to say thank you very much to our panelists, Manjit, Fabio, Fiona. It was an absolute pleasure today, and I look forward to hearing the session from later.
Thank you.
Thank you.